My name is Shawn Khunkhun. I'm the CEO and director of Dolly Varden Silver Corporation. Dolly Varden is an advanced explorer focused in BC's Golden Triangle. We have a large, high-grade resource. The company has $40 million in the treasury. We're in the midst of a 55,000 meter drill program, and we've been quite active this year making acquisitions and drilling.
Shawn, good to see you.
Good to see you too.
In person, so I'm especially delighted to see you here. We're at Beaver Creek, the end of Beaver Creek. It's been a long week, so I do appreciate you being here. What did you expect and what did you get out of this?
It's a good question. Because I've been coming for so many years, it feels like I've been in the sector for 22 years. It's almost automatic in terms of almost programmed and conditioned just to go through these motions of growth, you know, reaching out to investors. And so my expectations are to come out and to educate my existing shareholders, hopefully make some new ones, and really share the value proposition and the vision.
Right. So what I'm trying to work out whether this is, because every year people come and say, this is great, it's awesome. I'm not sure they mean it when they say it. This year they kind of feel it's a different vibe, a different feel to it. Gold price up where it is, silver price up where it is. It's got to help, because it seems to be people honing in on that one. What's the reality of in terms of conversion into the type of people that are interested in your story, the type of money that is interested in your story?
Yeah, that's a good question. I'd like to kind of reference it from a historical context, because often when you're in something, you don't know what it is until you look back. So for example, I was at this conference 3 years ago. My share price was 35 cents. We were being massively sold. There was a couple of years, 2022, 2023, where the silver price took a big hit. You know, from a $30 high to an $18 low, and September seemed to be when markets were correcting. So 2025 compared to 2022 feels really good. You know, we're starting to see more generalists. We're starting to see the devout market participants up their bet size because they've been rewarded with other equities. But if I think back to 2010, now, I don't even think Beaver Creek Precious Metals was a thing then, but if I think about the PDACs and the other types of events, that was a much different space. There was 50,000 people going to PDAC. We were in rip-roaring, incredible, euphoric environment. It's subdued. Today is subdued compared to that high 15 years ago. And so this is good. You know, we're off the bottom. You know, people are smiling a little bit more, and they're a little bit more optimistic. But it's, from a historical context, I've seen much better markets. And just to reference that, the venture exchange, where a lot of these companies are traded on, is trading at 800 points. That was an exchange that was valued at over 3,000 in 2007. So we've got a long way to go.
We do, and I think government participation in this kind of critical minerals list and industry, well, I think government affecting the markets positively and negatively and knowingly and unknowingly is definitely getting the conversation started. And I'm interested in what you guys then do with this information, right? How do you set yourself up for success in the future? Like, obviously silver price, $42 at the moment, really, really helpful, but you still got a bunch of stuff to do. So should we have a kind of more commercial conversation today about that setup and what's important for you? So to do that, maybe just quickly summarize where you've come from. Like, you've been buying up land, you've been making acquisitions, you've been, again, the setup is good. Can you maybe remind people?
So let's go to the why and the vision. So I'm going to go back to December 2019, okay? 3 months before I came in and took the role as CEO for Dolly Varden. I was hovering around the silver space, 2018, 2019, making a decision about getting exposure and getting shareholders exposure to this particular precious metal. And the reason for that is I've been working in the precious metal space since 2004, went through the big gold market in 2010 and 11, saw silver outperform. So as I thought we were heading into a new cycle, I identified a silver-centric company with a high-grade resource in a safe jurisdiction. So going back there, I remember having a whiteboard session on what are we going to do with Dolly Varden. And what my thinking was the majors were out there mining, depleting their mineral inventory. With the price environment, $16 silver at the time, there was no incentive to develop or explore. Silver was so uneconomic at that price that the majority of the silver cos were relying on base metal and gold production to fuel their company. And so I thought it would be a good time to start positioning around a core silver asset and to try to build it out. So over the last 5.5 years since coming in as CEO, I've systematically, methodically, and almost slowly, because I didn't want to take on too much dilution at that early stage of the market. But we've raised $150 million, and the idea has been, let's create a vehicle, okay? Let's create a instrument where investors could get exposure to silver. And how I thought I could do that was, in the initial phase, just increase the mineral inventory through drilling and through acquisition. So over the last 5 years, we've done 5 acquisitions. We've got a total of 5 past producing high-grade silver mines in the district. We've picked up a lot of good land. We've drilled, at the end of this season, it'll be 196,000 meters of drilling. We've made acquisitions that have brought in mineral inventory, so we've grown. And look, the market's rewarded us. The share price is up 650% since that day in February in 2020 that I joined. And the market cap has gone up substantially, from 20 million to about 550 million. And so we've been rewarded. And I believe, as you've probably seen following the company in April, in May, there's been a lot more activity. Q2 was our most active quarter.
Yep.
And so we're accelerating as the market is starting to move up.
I want to get into the psychology around your attitude to growth, right? Because I think in markets like this, and I've seen it all week, I see people come in here and they practically taking credit for the price of gold, and the price, silver, copper, whatever's going on. And they start to think different. I know investors do, they get super excited. We go, this is a 10 bagger, it's 20 bagger, all that kind of crazy stuff, right? You've got to be slightly more sanguine about this and say, right, do we change our behavior? Do we stay on course? Do we we can afford to be a little bit more casual in terms of that return on invested capital component because we're chasing growth? There's lots of ways that you start thinking in an environment like this because the sun's shining, right? What's your attitude?
So I'm a student of the past. And so I watched the sector go from having $1 billion in debt in 2000 to getting to 40 billion for a very small sector that's measured in the billions. And I saw the sector as they reacted to a gold price back then going from 300 to 1900, start going after uneconomic projects, low-grade projects, and just kind of lose their mind in that insanity. So as I'm having dinners and I'm listening and I'm hearing investors with this great confidence tell me how they're increasing their bet sizes, I'm cautious. I'm very cautious. And look, my role as CEO is different than my role as investor. I can be as aggressive as I want as an investor. But my role as CEO is I've got to listen to what my shareholders are saying. So Eric Sprott's invested $25 million and he said, Shawn, go make me 20 times my money. So I have to swing, but I've also got to keep us moving forward safely. And so to answer your question, you do have to play the environment, okay? And it's if the markets are there, raise money. If the markets pull back, look for opportunities to buy. So I try to be a contrarian, and I try to monitor a lot of situations and look for the inefficiencies of the market. There are some groups that have been very lucky to be supported by great investors and have access to capital and access to good technical people. We need to leverage that and look for opportunities. The one big takeaway I had from this conference was I was looking around going, where is everybody? And not that there wasn't record crowds and lots of participation, but where's all those familiar gray hairs that I'm used to seeing from the past? And I've been hearing about this idea that there's a void, a vacuum, an opportunity for a younger generation to step in. I really saw it this year where I was looking around going, where are the greats? I don't see them anymore, and there's less and less of them. And I think in that opportunity, we can build something pretty special. I'll give you an example. You look at the silver space. There are 10 primary producers. So what am I doing? in response to this environment, I want to become the 11th. So what do? My project is still a little ways away from production, but are there other ways, to advance things quickly? Can we continue on this acquisition spree, but instead of just buying idle past producing mines, can we buy active mines? And so it's about starting to think along those lenses.
Right. And do they exist? Because in good times, the price goes up. And when, referencing earlier return on invested capital, that you got to keep thinking that, you got to maintain that, or have a rationale for adjusting what that ratio looks like, return profile looks like. It feels like there's a whole bunch of overpriced M&A activity has happened recently. It always does. I think there was a perfect point in last year's market. Right now, is that a kind of focus for you? Do you think there are deals to be done?
It's all relative, though. Yeah, it's all relative. So, if your value has gone up, if I think back to where we started the year, where maybe our market cap's doubled. Okay, so if there's another entity that isn't up 100%, they're only up 50%, and they've got something that's more advanced, more developed, and they're trading at a fraction, that's accretive. Are there assets for sale? Absolutely. As companies grow, and start redefining what tier one means to them, there are opportunities for smaller entities to pick up things that no longer fit as companies are looking to simplify their business. So I do think, and it's all relative. So as long as it's accretive, I think go for it.
Okay. So you looking at some of you think like the tech deal, for instance, maybe there's a kind of rationalization of portfolios. There's always an opportunity around times like that. Are there any other activity, and are there any other M&A where you think, well, actually, maybe that might be opportune for us? There may be product
specifically
assets.
For Dolly, or as an observer of the M&A space?
Well, I guess both, right? Like I think I'm specifically interested in you, so hone back in on that one. But again, it's just that trying to help investors understand timing the market.
Yeah. So let's go back to the original mission. The original mission is I want to create a vehicle for you, a silver entity, right? But I've been studying this silver universe. I find it so fascinating. And what I find the most fascinating is, okay, and you would know this better than me, but we're in this world where passive money, index buying, ETF buying rules all. You look at the biggest and best and most successful companies that have that lower cost of capital, that competitive advantage. And I look into the space, and do you know that there's not a silver company on the S&P 500? And that there's really only 3 mining companies. So I think there is a huge opportunity if one were to take the lead and to have the identity and the qualifications to meet those listing requirements. And I think it's entirely possible, and I think it's a wonderful opportunity to create that competitive advantage and then go out and really consolidate in a lot of great assets.
Just talking about all these kind of variables tools you have available to you. We've seen a few companies come off of the TSX and moved into New York. We certainly have that as their primary listing because the sheer volume, dollar terms, in the US compared to Canada is obvious to all. But in terms of the buying behaviors now with generalist investors are leading CEOs to believe that probably a good use of capital, because it's expensive, right? But it's a good use of money. Is that something that you think about when you hit a certain size?
Yeah, so we made the decision and listed on April 21st, right?
Oh, right.
And it was something that I was advocating for 2 years before we made the decision, and it was something that I had to get my board comfortable with because there are additional costs, and the fear is in our sector, especially for Dolly was a small company, much smaller company. What if we were to go back there? What if we were to, and so the fear is you're going to take on all this additional, legal, accounting, open yourself up for more liability, all to just fall back. And so, my rationale was, look, if we're going to do this, let's do it. Like if we're going to build, let's build. And so I don't think there is any looking back, and you just have to continue to grow.
And that worked. It's working.
It's working.
Liquidity-wise?
It's working. Oh, no. I'm careful because I don't know what's around the corner, but it was my whole strategy this year. So if you go back, don't judge us at the 100% appreciation today. Let's go back to April. We immediately got a 38% bump. That's when we did the 3 M&A deals. That's when we really built ourselves up. We enhanced our treasury.
Yeah.
We started an aggressive drill program. So it was good execution.
So again, sticking with those variables and tools available to you. In that instance, M&A traditionally gets rewarded because it shows ambition, aggression, and growth. Always growth, right? So you've been doing that. Are those the only tools available to you? Can you do more with your kind of corporate structure? Are you specifically saying, well, actually, the acquisition is leaning towards, I need to kind of build up not just the resource, but maybe even reserve to set us up for something when we do get into production, or we want to attract someone who wants to get in production?
So I think the greatest value I can create for my shareholders, the most cost effective, is discovery. So it's about attracting and retaining the scientists and going out and systematically expanding, looking to make new discoveries. So I think it's been a two-pronged approach.
Right.
But if you go back, if I were to outline where I want to be, okay, so this is where we were, this is where we are today, but I want to come back here in a year. I want to sit back here and I want to talk about completing a journey, which is having production, having a pipeline of development projects, continuing to explore, and one further, which is creating a portfolio of marketable securities. So how is going out and being acquisitive, and I'll challenge what you said about acquisitions are rewarded sometimes in rising markets if some of them age well. Yes, in this environment, the companies who have been acquisitive have been rewarded so far, but in terms of other tools in my toolbox, acquisitions are one, science is another, through the drill bit. Divesting a portfolio of marketable securities, not everything that we go out and buy. Sometimes we'll go buy something and there'll be other parts that come with it that may not fit. One thing I have to be very careful of is focus, okay? We have limited capital and resources. If I get distracted, that's going to be problematic. So I just put a property on my books in May, and it's like, we're talking about a $600 million company. I'm going to reference a $9,000 property. But the reason I reference is, I think I'm going to be able to divest that for millions of dollars for my shareholders. And it's those type of thoughtful deals where that could satisfy all of our G&A needs for the year. And it's that type of creativity and value creation that my shareholders get to benefit from.
What's the, in terms of your share register, what's the kind of breakdown, makeup of that?
It's currently about 50% institutional. From what specific institutions?
Well, no. Well, sure if you want, but U.S., Canada, what? Yeah,
so Fidelity, U.S. Global, U.S. based. I don't know if all my institutional shareholders want to be named. Sprott is one. So maybe it's like a 50-50.
The industry, the mining funds are in there. No generalists?
So look, some of the generalists, what they'll do is they'll invest into a hedge fund.
Yeah. And
then the hedge fund will come in and own us. So it's, I might get an endowment or a pension fund that has come in through the hedge fund owns us. So 50% institutional, 26% amongst two corporates, 10% Mr. Eric Sprott, leaving about 13% in the hands of the public.
Okay, well, that's great. I'm interested in the kind of makeup of the institutional, because, whether it be between US and Canada, whether it be
and European and Australia.
European as well.
And Australia.
Australia.
Yeah, and Asian.
Okay, full mix. So
and South American.
Okay, we're running.
No one from Antarctica.
Running out of continents. So is the makeup of like a mining specific? The guys have been around the block and maybe not been so active, but there's the core of the business versus generalists and their attitude to the macro thematic of silver, which has historically been quite an erratic behaving metal. And I'm just wondering what the understanding is there. Is any reservation there? And do you think generalists could be attracted to something like you? And if so, what would the mechanisms be that they're interested in? Would it just be down to scale at that point?
So I just recently took up 4 generalist investors to the property. 2 from Dallas, 2 from Boston. They were managing about $9 billion. And I think what's happening is, as Newmont is demonstrating that they're the best performing stock in the S&P 500, the generalists are going, wow, we need to go from 1% to 3% weighting, right? And so the generalists are coming because the performance is here with the seniors and the leaders. So, and I think, look, silver is interesting because it's attractive to both the critical EV, industrial, but also the monetary metal crowd. And so you've got, it's attracting 2 different investor types.
Okay. So you feel that there's an understanding and there's a view about how silver will perform in the future. Industrial people want to talk to me about industrial usage, et cetera, EV usage, et cetera. You think that that's kind of steadying the ship somewhat? From my banking days, silver is one we're like, I don't know about this.
Look, I think we're early days in this market, so I think gold has gone from page 21 to maybe page 6, and so it's caught the imagination of the sophisticated investor. They're quite aware of what the gold price is doing in all currencies. Look, silver is not. I think, and it's so niche and it's so small that it probably won't. But we don't need it to. We just need it to capture a small percentage of those who wake up to the commodity complex.
Yeah, I'm not going to bet your house on it, but it's pretty interesting.
I have.
Well, good.
Was I not supposed to?
But I think for the average investor, you think it's worth a tickle because it's just, it's performing, it's reacting.
But can I say one thing?
Yeah,
I'm going to challenge that.
Yeah.
Okay. It's the only thing I bet my house on.
Right.
I'd sooner bet my house on that than my house. And it's because if I look around, everything seems priced to perfection except silver. So I challenged my kids 5 years ago. It was March of 2020. Silver got smacked down to 1164. And I made a case to my 11-year-old at the time, he's now 16, and my 8-year-old, she's now 13. And I said, look, take the birthday money and take the mowing the lawn money, and Dad will match you. And let's go all in on silver. And the lesson was, from a relative perspective, I think at the time, we live in Canada, in Vancouver, you needed 64,000 ounces of silver to buy the average home in town. And what I was trying to explain to them was, I think real estate is priced to perfection, and I think silver is extremely undervalued. And I think what they've seen as the prices move from 1164 to 42, and our real estate market's taken a 30% haircut, hey, and the lesson there is there's a time to come into an asset class. There's a time to, and what I'm hoping to do is there'll be a time to hit the bid on silver and maybe rotate that into another unloved sector.
Name of the game, timing. It's always about timing. Okay. Look, maybe just continuing with kind of thoughts on the macro, because I kind of want to feel as if I'm timing it right, and I haven't either missed the boat or I'm going to be too early and I'm maybe missing some opportunities elsewhere, and I've got time to come back to you later. So just sticking with your point about silver for the regular investor, not.
So I want to jump in.
Yeah, go on.
So if we get something gnarly, like some type of banking crisis, depression, major,
all the things people are talking about.
Yeah. So and it's more like the when, right?
Right.
Silver going to get thrown out, it's going to get hurt, and it's going to get crushed. But it'll come back fast and hard and furious. Now, I'm in silver because I will go through that and come out the other end of it. But so in terms of timing, the risk is if we go through that moment and soon, silver's going down, right? But for me, I'm not going to try to time this. I feel like it's impossible. For me, if I think about the last cycle, and it wasn't because I'm a great timer of markets. It just happened to be where I was with certain life goals. I came into the market in 2004. I left the precious metals market in 2011. I didn't come back to gold until 2014. I didn't re-enter silver till 2018. So I've been early, 7 years early. I could have joined in April, and it would have been great timing. My point to you is, I think you need exposure, and what I feel comfortable about is I'd sooner enter this market than others, right? However, just know the risk. The risk is if we get into something that is some type of a crisis, silver will go down. It'll go down. Now, will it go down on a relative basis, like more than other things? No. It'll probably hang up pretty good, but it will go down nominally.
Right.
And that's why I think maybe the responsible thing is to have some cash, right? Some silver and gold.
Yeah, big topic. Lots of variables and lots of theories at the moment, in terms of what the dollar's going to do and what the American economy is going to do. And, that's a big driver of both gold and silver, obviously. And China and India and all the rest of it. But specifically, that's what we're concerned about here in North America. Let's come back to the company. Okay. You've told us about some of the things that you've done and why you've done them and why you've timed that and why you think that's a good allocation of capital and smart. When you're looking ahead, maybe from some of the conversations you've had this week and your view of the kind of geopolitical situation in the world at the moment, what are the things that you're focused on doing in terms of the setup? Not the kind of, I don't mean this rudely, in terms of the admin of what you're doing on a daily operational basis, but what's the company got to look like in 12 months' time?
Yeah, so we'll be bigger. We'll be much bigger.
Through organic and discovery, or do we think that all the other levers work? Okay.
The sad truth is you can't grow fast enough with a drill bit, right? And as I mentioned earlier, when I was looking around at the legends of the space not being as active as they once were, well, why don't we take on those projects and drive them forward? We can access capital, and we have the technical team. And so where's the company in a year? It's a lot bigger. Success to me would be if we were maybe not a year is aggressive, but let's say 18 months. Success to me is if we are a $2 billion market cap and the share price is up 400%. That's success. Success to me 18 months from now is if we have a producing asset in the portfolio and we're continuing to use our new size to go out and bring in more assets.
So if you work your way back from that, $2 billion up 400%, that's got to come and be attributed to specific aspects of your business. So what are the things that you think people should be valuing more or better than they are now?
Well, I think right now, because we're pre-production, right? You could value our mineral inventory. You could place a value on the metal we have in the ground, and that's a way you can come up with a value.
Relatively, you think you're underpriced on that?
I know we are. Okay. If we took an enterprise value per ounce metric and we looked at our peers like Vizsla or Abra that are trading at close to $4 an ounce in the ground, Dolly's just come up through $3. So there's still a ways to go to be re-rated.
Right. Okay.
And I think if jurisdiction matters and grade matters, and on both those metrics we rank in a tier higher than our peers, right. I think you could even argue for a premium.
Right, and so what are those kind of proof points at the moment that the market can look to?
Say that again?
What are the kind of proof points? So if you're saying, right, our metallurgy is better, our recoveries will be better, our AISC, our costs.
Well, I think for me, access is everything.
Right.
So the fact that we've got past producing mines and the community is screaming. The community is going through hardship, addiction, poverty. They need this, okay? So the community wants it. Those other projects that are not in production, have challenges, have uncertainty. Metallurgy, not only have we done modern testing that is showing gold through 90%, silver at 88%, which is phenomenal for silver. we have got the old production records, right? Size a resource, grade a resource. Look, you don't have to go beyond our shareholder register to know like the level of due diligence a Hecla Mining does before taking a 13.7% stake in a company like ours is pretty significant. And so, the most astute precious metals investors in the space are supporting us. We're one of the larger names, like top 3 pre-production name in the space, and we've attracted the ETFs and the indexes, and that passive money category will continue to be attracted to Dolly.
Well, Shawn, I appreciate that. Right? Sometimes it's the setup is so important. The attitude, the plan, the strategy, that can define a company's chance of success, even sometimes more than the assets. So I've enjoyed that today. Thank you.
Yeah, and I also think like the energy of the team.
Yeah.
The energy that's going to, these
people.
Yeah.
Absolutely, it's about attitude, and I think what I've seen this week is the companies that come in with this kind of entrepreneurial, can-do attitude and reactionary and agile. That really, really helps. It's the groups that come in and say we've always done it this way that I struggle with. I really do. But you're not one of those. So good to speak to you.
Not yet.